All right, welcome to this explainer. Today, we're diving straight into why ditching all that financial chaos for absolute simplicity is, without a doubt, your greatest wealth building tool. We are constantly bombarded with this idea that making money has to be super complicated, incredibly stressful, and highly technical. But today, we're going to flip that script entirely. We're going to look at the hard data and see exactly how scaling back and simplifying your approach isn't just easier, it's actually mathematically superior. Seriously, the data shows that in the financial world, doing less literally makes you more.
Think about this for just a second. Why do active stock traders actually fail? I mean, the media loves to glorify that fast-paced trader, right? The one glued to 6 monitors, frantically trying to time the exact top and bottom of the market. But when you look at the actual numbers, the reality is that most active traders lose. They try to beat the market, they try to time their entries perfectly, and they're just constantly chasing fast money. But as we'll see today, market timing is a complete trap that relies way more on fleeting luck than concrete math. So here's our roadmap for today. 1. The trap of fast money. 2. Why boring always wins. 3. The index fund advantage. 4. Plugging your financial leaks. And finally, 5. Automating your wealth. Let's get right into it. Section 1. The trap of fast money and the illusion of getting rich quick. There is this incredibly stark contrast between the fast money crowd, who, frankly, usually end up broke, and the slow money winners. Think about active trading. It's all market timing stress, astronomical fees that constantly eat away at your profits, frequent losses, and absolutely zero predictable foundation. You are effectively just gambling. But then look at passive growth. That's about owning the entire market. You get to enjoy predictable compounding over time, you experience zero daily stress, and you eliminate guessing completely. It turns wealth building from this exhausting sprint into a really comfortable marathon. Look, the truth is, trying to guess what the market will do next just introduces so much unnecessary daily stress. It's a total trap. And here's the absolute kicker. Even Wall Street professionals fail at it. Seriously, over a 15-year stretch, nearly 90% of actively managed investment funds actually fail to beat the market. Think about that for a second. If the pros, with their supercomputers and billions of dollars in research, can't reliably time the market to beat it, why on earth would you play their game? It's a game you win by simply choosing not to play. Which brings us to Section 2, why boring always wins, because consistency absolutely beats intensity. They say boring consistency outperforms everything, and it is so true. Spectacular short-term intensity, it always fails eventually. You might have one amazing month of active trading, sure, but over a decade, that intensity totally fizzles out during hard times, economic downturns, or sudden market crashes. On the flip side, small, boring daily steps and predictable investments compound beautifully. They build lasting financial empires in the background entirely without the anxiety. When your strategy is boring, your results can be absolutely extraordinary. Honestly, your timeline dictates your entire reality. If you operate on a one-day timeline, you're constantly panicking over daily market noise and scary news headlines. Stretch that to a one-month timeline and you're just chasing whatever the current trend is, probably buying high out of FOMO and selling low out of panic. But if you adopt a 10-year timeline, you completely delete the daily noise. Market drops just become cheap sales where you can buy more assets at a discount. Zooming out makes wealth accumulation virtually inevitable because you step out of the chaos and just let the math of compounding do all the heavy lifting.
So, how do we actually stay consistent for 10 whole years? Well, it's definitely not willpower. Human discipline is just highly unreliable. It's a limited daily resource, and the second unexpected life events happen or stress hits, your willpower breaks down and emotional spending kicks right in. Relying on willpower is a total financial trap. Automated systems, however, they run forever. They require zero daily motivation and zero daily decisions. The wealthy don't rely on being incredibly disciplined every single day. They design rigid systems up front and then just let them run.
All right, Section 3, the index fund advantage, owning the entire market. So how do we apply these automated systems to the stock market? Simple. We use the ultimate boring tool, an index fund. If you're not familiar, an index fund is basically just a super simple investment that literally buys you a tiny piece of every single successful business in the entire market. Simplicity is your financial superpower right here. Index funds do not guess. They don't try to find the next big thing or pick individual winning stocks. They just own everything. So when the overall market grows, your wealth grows. Zero guessing is required, which means zero daily stress is required.
Let's build a real mathematical case against the professionals here. Hedge funds rely heavily on guessing and timing. Index funds, they just own the whole market.
Hedge funds charge these massive, exorbitant fees that completely drain your potential wealth over time. Index fund fees are incredibly low, keeping more of your own money right in your pocket. The stress level with active funds is just off the charts, while index funds are a true, zero stress, set it and forget it kind of deal. And the most important metric of all, the long-term win rate. Hedge funds consistently have a surprisingly low win rate against the broader market, while index funds naturally capture that high long-term growth.
Moving to Section 4, plugging your financial leaks, stopping the invisible drain on your wealth. Because before we can fully leverage index funds, we absolutely have to stop the hidden expenses that are quietly destroying your potential wealth. These are the wealth destroyers right here. First, high trading fees from active investing. These silently compound against you over the years, eating away tens of thousands of dollars. Second, lack of diversification. Putting all your eggs in one stock exposes you to massive, completely unnecessary risk. Then there are the everyday leaks, those forgotten subscriptions quietly hitting your card every single month, emotional spending triggered by daily stress, and uncontrolled lifestyle inflation, which is when your spending goes up every single time you get a raise, secretly keeping you broke forever. Remember, small recurring costs can sink really large financial ships.
So how do we stop that emotional spending leak? There's a brilliant, simple, tactical trick for this: the 48-hour rule. Most consumer spending is highly emotional, right? And that impulsive emotion makes your money vanish before you even realize what happened. So if you want an item that is non-essential, just force yourself to wait exactly 48 hours. During that time, the emotional high of the impulse will naturally fade. Logical thinking returns. You'll usually realize you don't actually need the item at all. And boom, you've just saved yourself cash that can now be invested directly into your future.
And this is precisely why simplicity is a true superpower. You don't need complicated spreadsheets. You don't need hours of daily market research. The classic 80-20 rule perfectly applies here. 80% of your wealth growth comes from just 20% of your financial efforts. You literally only need to focus on the major pillars: growing your primary income, maintaining a healthy savings rate, and executing that core index fund investment strategy. Get those big pillars right, eliminate all the unnecessary noise, and your overall wealth is going to skyrocket while your stress levels drop to zero.
Finally, Section 5, automating your wealth. Let's reverse the financial flow and put this whole thing on absolute autopilot. Average earners generally pay their bills first, spend whatever random amount is left over, and usually have absolutely zero left to save at the end of the month. We are going to flip that flow entirely. Step 1, pay your investments first. You have to treat your future self as your most important, absolutely non-negotiable bill. Step 2, automate those deposits and your fixed bills so that the money moves the precise second your paycheck hits your account. This completely removes human error, bad memory, and temptation. Step 3, live entirely guilt-free on whatever cash is left. With this setup, you never have to test your willpower again.
When you structure your money like this, your cash flow becomes beautifully simple. Imagine this: 20% goes straight into your automated index fund investments without you even lifting a finger. 50% systematically handles your fixed bills and essential living costs. And that remaining 30%? That is pure 100% guilt-free spending. Go buy the fancy morning coffee, take the weekend trip, buy the shoes, and do it without a single ounce of stress. Why? Because you know your wealth is already building silently in the background. You're fully enjoying your life today while mathematically guaranteeing your financial future tomorrow. I really want to leave you with a provocative thought as we wrap up this explainer. Think carefully about this. Will you choose temporary comfort right now or future freedom? Because every single spending decision you make is a trade-off. You aren't just trading cash, you are trading what that cash could mathematically become if you just invested it simply over a decade. Stop chasing the fast money, embrace the boring, incredibly consistent power of index funds, automate your financial systems, and take real action today. Your future self is waiting to see what you decide. Thanks so much for joining me, and I'll catch you next time.